Standard Gains Podcast, episode 9, take 1.
Here we go. And as of right now, we have around 120,000 views, listeners, subscribers in total on every single platform. Thank you guys so much for that. And today,
we're going to be talking about investing, about the different types of investing, how you can go from having $100 to maybe even 100K.
Exactly. So what I really like about this topic is that lots of mainstream people do not use any of the investing ways at all. So, for example, my dad, he recently found out an app called Peaks, and you can just sort of have a little bit of change money, pocket money. Pocket money. My dad doesn't really get that, but that is what they advertise with. And you can just put that in the app, and it will sort of invest for you, and you can set it as spicy as you want, and you can just let that invest for you and have just 7% profit or minus 7%, obviously. But it just gets you going with just a little bit of investing, and you can have so many different options in investing rather than just having it on your savings account. And that is just so interesting to me that no one is still using.
Yeah, exactly. And I think one of the things is that you know, where do you learn these things? You learn these things nowadays on YouTube, on podcasts like these. But if you think back about school, no one teaches you how to actually manage your money and handle your money. And I think a lot of people, like your parents, if they would have started investing, even if it was just a bit at your age, they'd be much more financially independent right now, because it's just about starting, knowing what to do with money that you can actually miss.
Yes.
Right? Just two things here. One, we are not financial advisors. We're just giving our options here, our thoughts here. And, you don't have to listen to us, just sharing our opinion here. And the second one is always invest with money that you can actually miss for a longer period of time.
Exactly. And one of the main topics this podcast will be about is also long term. So we are not in here for the hype things, or can also work, but really looking at it, like you said, if my parents were, for example, would have invested $1,000 back when they were my age, it would have probably be a lot worth a decent amount right now. And that's just an interesting way to look at investing rather than keeping the $1,000 in your saving account.
Exactly. So my dilemma for you, as I know you do quite a bit in crypto, as you said in the podcast with Austin, maybe a bit too much. So right now we have sort of a bull run in crypto and you have some money in there. Would you say keep all your money in crypto or take some profits and put it either on a savings account or stocks or anything, get it away from crypto?
Take some profits and put it away.
Okay,
so for you, would you start investing right away or do a year research and then start investing? So research versus starting right away.
Research. So you said take profit.
Yeah, so I would say definitely also in crypto, because of it's an extreme bull run and no one knows when it's going to end or if it's even going to end. I would say have sort of an exit strategy and keep to the exit strategy. So if that is taking a bit of profit and that means you have sold something at a profit, what you can do with the money, you can definitely put it back in crypto if you have some coins that you do believe in, but also to play a little bit more safe with the profits that you made. Maybe invest it back into some stocks or some ETFs, and just keep it there, or even on a savings account, just if you need it, for example.
Exactly. And you said an exit strategy. Do you have do you really define one? What can you give an example of an exit strategy?
My exit strategy for crypto right now would definitely be, it's not the best one, but it's more, I know when people say the bull run is going to end. Obviously, that doesn't mean too much.
I mean, if enough people say it's going to end at this date, then it will probably going to end, maybe even a bit prior to that.
Exactly. So I definitely have a selling point in summer where I'm going to be selling 20 to 25%.
Yep.
And then I will be looking at the market, and I will probably be sort of around my birthday, which in October, I will probably have sold a decent amount. Maybe even have put it back in different coins, or maybe I've just put it on the sideline, so keep it in USDT, and also take some profits and put it in stocks.
All right.
So you said research.
Yeah. So, I mean, you said a year first, and I thought a year is quite long, but I think you should always do research before buying and investing anything. A lot of people buy, especially crypto right now, because as we've mentioned in our crypto channel, which we have just launched as well, we have a channel on stocks, on crypto, so make sure to check it out. Link is in the description, show notes, and all those things.
Definitely.
But as we also said there, people start buying crypto because their hairdresser talks about crypto, or their Uber driver, or whatever. And it's very easy to get the fear of missing out, shiny object syndrome, those kind of things. Yeah. Know what you invest in. And I think a funny little example here is that I invest in, for example, Cardano right now with leverage of 3. And that's a high risk thing. And I actually started buying it because someone told me about it. I started doing research. But now, and it's been an amazing gamble because the time that I bought it was perfect looking back. I spoke to the other guy and he said, well, why isn't it always, I was expecting more profits now. And I had to explain to him how this leverage works and how they recalibrate, because he just said, yeah, someone told me it's good, so I bought it. And now he's pissed that it isn't giving him the results that he was thinking, because it's not, there's a lot of cost in there that he didn't even know. There's a lot of other things they do to sort of protect you. So do your research.
Definitely. But that's interesting, because I do think the research phase is really important, but also investing from the start, just with a little bit of money, just so the learning phase just starts right away. And if you're invested into something, there's probably a sort of curve that you're really invested into it, like literally, and you are learning probably faster because you don't want to lose the money. Obviously, do it with money you can lose, and it's not going to bother you as much. But even if it's just with $100 and you're going to start with that, if that is like not a lot of money for you, then I would say that's a decent.
Yeah, that is true. And it's sort of, it's like, it goes two ways. Yes, you should just start and get the experience, but there's also the research phase in terms of what broker do I need and all those things. So I really get your point. It's sort of true. Both. But in general, I think we can say, what you say, start as fast as possible just to get a feeling out of it. But also don't buy because someone tells you to. Do research while you buy something. So I guess it's a combination of the two.
True.
All right, so here are 6 ways of investing your money. And number 1 is putting your money in a savings account.
Definitely. So that is what everyone does, or a lot of people. Can I say everyone?
Especially the older generations, for sure.
Definitely. So that is literally just an account at your bank. That's it. And you have a checking account and a savings account. And either way right now works sort of the same. Because is there a problem with a savings account right now?
Well, the main problem is, of course, that the interest that you're getting from the money you put in your savings account is, in most countries in the world right now, lower than the inflation. So it means that you're actually losing money by just putting it in the bank right now. Which doesn't mean that you should run to the bank right now and just take it all out and put it into crypto or something. It's very important to have, especially for a rainy day, when things break. Or another reason why it's very important, say that you do put money into crypto stocks, all the things we'll speak about right now, and you see that the prices are going down, but you need cash, then you have to sell your stocks with a loss. So you need to have that money in your savings account.
Definitely. So this is also the most common one, and there's nothing wrong with it, but it is, most of the time people say have 3 to 6 months of your needs every single month in your checkings or savings account, so you can use that or for a rainy day or for investments that we will talk about. For example, if the stock market goes down and you have your money sitting there and you have no clue what to do with it, you can invest it back into, for example, number 2.
So number 2 would be stocks. And stocks historically have done really, really well. If you look at the past 100 years at the S&P 500, for example, in America, it's done over 7% return on investment on average per year. And that's even correcting to inflation. So that is a really good return on investment.
Exactly. So if you look at that compared to your savings account, for example, then that is a significant growth compared to basically,
nothing.
Yeah. Or, back in the day, because this is also fun with investing, everything changes. So that makes it fun or really frustrating.
Could be both.
The inflation also varies, obviously, or deflation. We don't want to go too much in that, but just so you know that every single investment could have its ups and downs. For example, with stocks, you can have a recession and everything goes down. For example, cycles, every single 7 years, it goes up and down. 7 years?
On average, yeah.
On average, because we sometimes skip it and sometimes it's a little bit shorter, a little bit longer. But that's interesting. And right now, we are on that 7-year point.
Even a bit more.
Even more, meaning that it could go down, but we're in a really weird situation right now.
It is really weird right now because think about everything that's been going on in the world, and still stock markets are at an all-time high. So I think that's also a change in how governments are dealing with recessions, with crisis right now. So there's even people saying we won't have a big dip anymore in the future unless maybe a world war breaks out or something really big. But if even COVID cannot break the upward trend right now, then what can?
That is the big question. But for this investment, number 2, stocks, it is really just looking at a brokerage and just investing there. And starting with, for example, ETFs. These are like you said, the S&P 500, just having all the biggest companies in the US all together, and you're basically buying a little bit of every single stock. And you can expect a 7% return on the past 100 years. Everything that happened in the past is not for the future, so it's not a guarantee. So that's definitely what we want to say. But that is a better investment as a sort of savings account than your normal savings account.
Yeah, I agree. And again, do it with money that you don't need short term. And especially if you are, your age right now, early 20s or early 30s even, if you just put some money, maybe even $100 a month or $1,000 or $2,000 a year, put it in a ETF. So ETF is just something, as you said, that tracks. Could be S&P 500 or could also be all the for example, sustainable energy businesses or something like that. Just put it in there, and long term, it will just really compound, and it will really, really make a major, major impact and grow.
But there's more to stocks. We're not going too much in depth in every single thing because we're keeping it really to the top 5. But
well, with stocks, so what we spoke about is that you are investing yourself. You can also have someone invest for you, someone who's a professional, and they will buy and sell for you, do ETFs and stocks. However, keep in mind, you get 7% a year. And this compounds, and compounds means that if you reinvested 7%, your profit becomes more and more and more, and it really goes exponential. And if you have someone manage it for you, they will take 1 or 2% of your portfolio a year. And you might think, well, 1 or 2% is not that much. But with the compounding, it's going to make a world of difference in the next 30 years. And that's just a big thing that you should really realize. It's not necessarily a bad thing, but really be aware of this.
So these are extra costs, and they take 1 to 2% of your portfolio profit.
Yeah.
Or
No, of your portfolio per year.
So if you are in loss, they still take the 1 to 2%.
Yeah, because they're managing it for you. It's their fee.
Yeah.
And that just, and there's some which are a bit lower, some are a bit higher. And I think if you do proper research and if you're just investing for long term, so ETFs mainly, you don't really need someone to manage it for you.
Exactly. So you've also got dividend investing, and this is just investing in companies that actually pay out dividend. And there are people that are living off of dividends because they have invested a few $100,000 in some companies that pay dividends, and that's a certain percent per year. And let's say you live on $30,000 a year, and you have $1 million invested, and you'll get 3% dividend per year.
Exactly. Yeah, and basically what dividend is it is a part of the profit that it's making, they're giving back to the shareholders. Because as a shareholder, you are part owner of the business. And some businesses pay 1 or 2%, some pay like 10, 12%. Keep in mind, there's a reason why they pay such a high dividend. Probably they need your money because, they're struggling. So there's more risk in the investment.
In losing basically everything. But so that is it for stocks.
And for number 3, we have crypto.
Cryptocurrency, coins, tokens, everything that you've heard about in the news, Bitcoin, Ethereum. You can invest in this via lots of different apps, Coinbase, Binance, KuCoin. You have lots of different stuff that you can invest in. And it definitely is very volatile. So you should definitely watch out for this. But that also means that there are very big profits to be made. And for the cryptocurrency market as of right now is extremely booming. It is hyped. And there is also a cycles going on there, at least as far as we can see, because it has been only around for 10 years. But what people say is that if it goes over the 10-year mark and it's still growing, then it will probably stay for the long term.
For sure. And I think a lot of people, when they think about crypto, they think about trading. So I think this coin is going to go up the next few weeks. I'm going to buy. Yeah. We are really focusing on the investing. So buying it for long term. And what is important with crypto is figure out what does this coin do? What sort of use is there behind it?
What's the problem they are solving?
Exactly. And that is something that you can find, do research, but it is so important because just buying a coin that has no real function, it's not solving a problem, probably won't make it in the long run. Might shoot up right now. We saw it with, for example, Dogecoin in the past months, where it became sort of a meme coin and people made crazy profits, but long term, it wasn't sure if there was any use for it.
As of right now, because it is growing so big, they are looking for use case and they're actually tweaking it and they're actually putting a lot of work into it. So
together with Elon Musk.
With Elon Musk even, at least that's the speculation. I think Elon Musk even tweeted
about it. Yeah.
So you can see that there's a lot of buts and then and ifs with this market, but as a steady start for this investment way, you can just start with also obviously buying the basics like Bitcoin and Ethereum, because these are the sort of older coins and more well-established coins. But you can from there start with investing, and again, with money that you are not going to miss and that you can miss, because there is definitely a chance that you are going to lose all the money with crypto.
Oh yeah, definitely. And one of the things that we have both noticed when you do crypto is you keep checking the app, you keep checking what's happening with my crypto portfolio.
Time consuming.
Yeah. It is time consuming. And when we speak about investing, if I think about my stock portfolio, which is much, much larger money-wise than my crypto portfolio, I check my stocks maybe once a week. And the crypto, once an hour, maybe one every other hour, because it could be plus or minus 10%. But it doesn't, or more, right?
Even more.
In an hour. But I don't even trade it. I don't sell it if I see plus 10 or minus 10. So it's
mental, yeah.
It's very mental. That's something you have to realize. And I think ask yourself, how much am I willing to lose? Because it is a high risk. So actually we, on our other channel, we bought $1,000 worth of crypto. And what we did is we decided to buy 5 different coins, because I believe you shouldn't put all your eggs in one basket. It's pretty important to buy several ones. And we've seen after a month that one coin has actually almost doubled. And some have lost like 10, 20%, but just by spreading, it is, we're minimizing sort of the risk, and we're still getting a good profit. And if you're interested to find out what coins that we hold and what we find super interesting long term, make sure to check out our other channel on crypto and investing. The link is
in the description
below.
Show notes everywhere. Make sure to check it out. And that is it for mainly crypto. So buy coins at your own risk and buy them with proper research. And there's definitely a lot of profit to be made here. So, on to the next one.
So, number 4 is real estate, one of my favorite ways of investing, but the one with the highest barrier of entry, because you can't just go and buy $100 worth of real estate.
Exactly, because if you are looking at a real estate investment, also to define it here, buying your house and making a profit on that because the price goes up is definitely real estate, but it is... You're living there. So real estate, the big profits also can come from tenants.
Exactly. And I can just sort of tell my journey in the real estate thing, and then
Bob is quite big in real estate, or I think we can say that. We can say that. You're quite big.
I think so. So, well, the first thing I ever bought was the house I live in. So that is, again, not really an investment, even though it turned out to be a great investment.
Yeah, you can call it an investment, but it is, if you're looking at the max potential of an investment of real estate, there definitely is also like tenants.
Exactly, yeah. So then I started to look, what can I do right now? And I didn't want to start buying with another apartment or house straight away, because that's a lot of money. So I started buying garage boxes. Now, keep in mind that where we live, and especially where I live in the city, people don't have enough storage space. So if you have a garage box somewhere in the city, people are they really want to get it. They drive there, they put their stuff, maybe their winter stuff for summer or something else in there. And they pay about a 7%. So if you buy $25,000 worth of real estate garage box, they pay about $150 a month, which is about 7% return on investment yearly, which is a pretty decent thing. Plus, over the past years, the value of the garage box has gone up from 25K to almost 35K in just 5 years. So in total, it's been an amazing return on investment. And so that was the first thing that I did. Then I thought, okay, I bought several of those garage boxes. I want to see what happens if I do something else. And I started buying a holiday rental. Now, holiday rentals are a bit different, because you can either, just like with stocks, say, I'm going to find tenants, I'm going to clean it, the profit is all mine. I decided that I don't want to be called if, I don't know, the tap is leaking or if something happens. So I bought it on a park where there is an organization, they rent it out, but they do take, 20% of the total revenue.
Yeah.
So again, you lose some profits, but they're also doing all the marketing, and it's always full. So there's pros and cons. The next step for me, what I'm looking at right now, is buying an actual second house or an apartment where a family, for example, can live. Again, I will find someone to manage it for me, so I will lose a bit of my profit. But 6-7% normally, currently the house prices are really, really high. So you have to look for discounts.
Yeah.
So you might be 4-5%, but it's if you have the money, they always say you can work 80 hours a week, but you will never make as much as from a rental property.
Exactly. This is a really great way of investing. So it is definitely also a sort of higher or you need more money to get into real estate. So you do have an option for this, right?
Yeah, well, the first piece of real estate that you're going to buy, you will need to bring some cash.
Definitely.
That's basically, so I brought in cash and I got a mortgage. And over the past, in the first, I think, 8 years, the price of my house doubled, which was,
Yeah.
I'm not guaranteeing that's going to happen in the next 8 years. So then what I could do is I could go to the bank and say, hey, I have a mortgage of, let's say, 100, but my house is worth 400, which is roughly what it was. I want to get a mortgage, second mortgage on my house worth 200K, which then I used to buy my rental property. So I used that to buy the holiday house.
So there's no upfront money for you.
Zero. I didn't put in anything, and the rent that I'm getting is enough to pay off my mortgage in about 15 years. So in 15 years, the bank basically gave me a house. But now the fun part comes, because I got the mortgage on my house where I live in. This holiday rental doesn't have a mortgage. So now I'm going to go to the bank and say, I have this house here without a mortgage. I want to get a mortgage on that. And then I'll use that to buy a next holiday rental. And then a year later, I can say to the bank, hey, I have this holiday rental with no mortgage. And that's sort of how you can start getting more and more and more real estate, especially right now because the interest rate on mortgage is so low.
Oh, yeah. So there's so many options with real estate, and you can now see what makes a real estate investment, because if it's your own property or a studio, we're recording this in a studio. I bought this studio. It is definitely an investment, because it is an asset that's probably its worth is growing, probably. But I'm not like renting it out. I'm using it myself, which is also a great investment, because on the other hand, I'm saving money because I'm not having to pay rent to actually like get a studio and record everything in there. So that's very interesting. But the way you are investing, which is also like the most profitable way, what do you think of the ethical aspect of that? Because the housing prices are insanely high, partly because of a lot of people buying it up that have a lot of money.
Yeah, it is a problem. And I don't want to get too technical here, but one of the things that the government is also stimulating is to have the mortgage interest rate really low, because they said, well, then if you want to buy your first house, it's easier to buy one. That just meant that I and basically everyone who had some money started buying more houses because the money is so cheap. So the house prices rose a lot. And now the starters still can't buy a house. So they have to go to me and rent, and I can ask a premium because I know they cannot buy a house. So it is definitely a major problem. And I think the most important thing there is just, I would rather have someone pay a bit less to live in a house that I own, but I know that they will take proper care of it because they appreciate that, rather than putting 25 students in a small house, getting the maximum profit, but they're screwing up my house. And I think if you do it responsibly yourself, you're going to make an insane profit and can still help people out. Yeah,
so that's the next question. We're going to put you on the spot. Are you asking a big premium?
No, I don't think so. I even have, and that is sort of a very interesting one. I have a garage box, which is attached to a house, and there's an elderly couple living in the house. There's even a door to their house in the garage box.
Oh.
They were not allowed to buy the garage because they were older, not greatest health. So the bank said, we're not going to loan you any money. So I bought it, and I could really tell them, hey, do you want some random person here who can actually walk into your house, or do you want to rent it? I just spoke with them and said, hey, let's just do a very fair rent for you. They're super happy, but in return, well, first of all, he sends me photos. Oh, I just painted the garage but you don't have to pay me for it. So he's bringing something back. Plus, if they're going to move someday and they're selling the house, the new owner will want to buy the garage box. So then I can ask a premium for buying it.
For someone who has that's nice. So that's a great way to look at it as well. So for me, I would say buy real estate definitely, and if you do it responsibly, then that is a very nice way of investing. Obviously, everything is about making money, but also looking at the like the side effects that it has on the world. It is cool to look at it. So I definitely know I know someone that if I wouldn't have asked this question, he would be like, yeah, but there's a big problem right now. So
there is a big problem right now but we won't go too much into this. I do think you said something that sort of triggered me. There's a big discussion always about, should you buy your own house and live there, or should you buy a house and rent it out and rent another place for yourself?
Ooh.
Do you have an opinion on this? I know
because I just said something about.
You just said something about, you buy your own house to live in. That's sort of it, because I don't have to pay. Or you said about the studio, so I don't have to pay rent here.
It depends on like what your need and your lifestyle, and also the rent that you pay probably in terms of profit. But I said it in the studio way, so because
you could have also bought this, rent this out to someone, and rent another studio.
Yeah, so if the profit from this, and if I'm asking more rent to, I mean, then
this is exactly why it's a weird discussion. So the reason why people say this, I think, is because they say, well, if I buy the house that I rent out, I can keep that forever and always keep renting it out. And if I feel like I want to move, I don't have to sell a house and buy a house. All I do is...
Exactly.
But for me, it was always, I just buy wherever I live. But I know most investors who purely look at it from an investment standpoint say, never live in the house that you own. Because buying and selling costs quite a bit of money. You pay taxes and other fees. So just buy something you can keep and renting out always, and just rent whatever, wherever you want to live, so you never have those fees.
Or you can buy the house, live in there, and just buy a next house and keep the other house as well and rent that out again. So you just keep buying everywhere you go.
As long as you have the cash flow to do so, I think it's also what my plan is. So I'm looking at a new house now, and I will probably live there and start renting out the house I'm living in right now.
Nice.
I think that's just, real estate is pretty difficult. There's a lot of things there, so I hope this made sort of sense.
Yeah, and also I briefly mentioned this. It sounds like a big gap that you need from the money. You can also have cooperation investing in houses. That means that you're basically buying a part of a house, like put in 5,000 for a house that's $200K, and then you get to own part of the house. But there are a lot of complications with this, and also no guaranteed results, obviously. But you can start with real estate investing from, any point, sort of?
Well, there's even ETFs.
ETFs in housing,
real estate, but most of those are commercial real estate, and commercial real estate right now isn't the best because of COVID. A lot is vacant, and it's still the question, are we going back to the old normal, as they say, or will we all keep working from home and all those kind of things, which will have a major impact on the commercial real estate prices. So, and also the house price, by the way, because people want to have more space in their house, so they're buying bigger house. So I think this sort of little thing that you also started it's cool to, again, it's the way of thinking before investing. And, at the end of the day, it's just, what do you believe is going to happen in the future, and act on it. And you can be right or wrong. That's life.
Definitely. So this was a part about real estate. Very interesting. Now we're going to 5, bonds.
All right. So bonds is basically either the government or a company, but mainly let's keep on the government right now, that they need money, right? Governments often have a shortage in terms of the total money that's coming in through taxes and everything, and that they're investing. So they give out bonds, and they're giving interest on it, basically.
Yeah.
And the thing with bonds is that, so you buy a bond, and that means you get a certain percentage every year, but then there's also a price, so you can actually trade the bond. And the way this works, and I'll try to explain this as simple as possible. Say that you have a bond for €100 that I buy, and you're giving me 2% interest every year. That's great, because on the bank, I'm getting no interest right now. But what if the interest goes up to 5% that I'm getting on the bank, but you're only giving me 2%? So that means that if my money is not well spent having your bond anymore, because it's fixed for normally 10, 20, 30 years. So then I can sell my bond, but you will probably only pay like 30, 40 bucks for it, because the interest is so much lower.
Yeah.
But if, say that I buy it from you and it's 2% interest, and the bank is also giving me 2% interest, buy it for 100, and then all of a sudden the bank is only paying 0.5% interest, and everyone will want my bond, because for the next 30 years you're getting 2%. So the price of the bond goes up. So this is important to sort of realize that it's a complex product, and it depends on the interest that you're getting compared to the interest you could be getting somewhere else.
And the interesting thing about bonds, that's also why we included it here, is because of multiple reasons. One, it works in a way that you can actually sort of get a guaranteed result, but also a nuance there. And the second one is that you can start investing in bonds you do not need a big budget, right? So you said 40 bucks for a bond. It also depends on how interesting the bond is. So if you're getting like 5% return and on the bank you're getting like 0.5%, then the bond is probably worth a lot to someone who is going to put in a lot of money.
Exactly. So you're basically paying a premium on top of the bond. So just to round it off, say that you have a bond for €100 for 10 years. After 10 years, you will actually pay me the €100. Yeah. That's what I know. Plus 2% interest every single year. So again, if then the interest on the bank goes to 4%, I might want to sell it for 50 euros to Jorg, who's filming right now, and he's getting 100 from you in 20 years.
Yeah.
But he's losing out on 2% interest for 20 years.
Yeah.
It's I hope that's sort of clear, because that's sort of
It's interesting, but the way that that works is that there is a way of investing with bonds that Bob explained to me, and that was very interesting because it's not working right now.
No, so if you look at every big hedge fund manager, every big portfolio holder in the world, what they used to do is they say, okay, I want to have 70%, for example. Let's do 50-50. That's easier as sort of to understand. I want to have 50% of my money into stocks and ETFs and 50% into bonds. What normally happens in the world is if the economy is doing great,
stocks go up.
Stocks actually go up. And interest on the bank also goes up. Now, what we just discussed is if the interest of the bank goes up, the bond price will go down because your
bonds are less interesting.
But I want to have 50-50. So my stocks are going up, my bonds are going down. So now I have to sell some stocks and I actually have to buy some new bonds to be back at 50-50.
Yeah.
Now, that will happen a few times, but then at some point the economy will go down. As we discussed, you normally have a cycle.
Stocks go down?
Stocks go down, but what happens when the economy goes down? The government wants you to spend money to, make sure the economy goes running.
Yeah.
So spend money, they lower the interest rate.
Bonds get more interesting.
Yeah, exactly. So bonds go up. So now I have to sell bonds with a profit because I bought them low and sell them high.
Yeah.
And I have to buy more stocks low now. So that way you force yourself to always sell with a profit. Now, this has always worked and has always guaranteed the best possible results with investing. However, this is the first time in history, as far as we are aware, because there's a lot of research about this, that the economy was doing amazing prior to COVID.
Yeah.
And the interest rate was 0. And now there's a problem because now the economy started to crash, but they cannot lower the interest anymore to make people spend more money. So the interest rate will stay low and this whole system stopped working, unfortunately.
So that is why I included this, because it is such a safe or great investment, but it's not now anymore.
Yeah.
So I think that's why we found it interesting, and also let you know that there are so many sort of ways to look at investing, and this is going a little bit more to the complicated side, but going from the first way of investing, that is your savings account, to something as complicated as this, but it can give you an insane result, just start. Just research and start with investing, maybe even into stocks like the second one, or crypto if that's what you're more into and you have the time for that, but just start, because there is so many options, and I would say that basically single thing you can do is probably better than keeping it on your savings account if you can lose the money, obviously.
Exactly. Yeah.
Then because long term you're not gonna invest in stuff that you think is gonna lose money. At some point you're gonna be learning and you're gonna start up with a few bucks and build that up. That's how I started with investing when I was like 17, 18, like with $100 on Bucks, that like that's literally
the app, yeah.
an app, and I started investing there and I lost all that money on because I didn't even know that on the app you could literally like buy you weren't really buying the stocks, you were more speculating about stocks, yeah. Also with leverage, so you could say like ×3 or ×10 even, and then you could just buy the stock in Tesla, for example, and if it goes down 10% and you bought it with 10 times leverage, then 10 times 10 is 100, then you lost all the money in that stock. So I lost all the money there.
But now you know how leverage works.
I know how leverage works. I also know how stocks work, why they go up and why they go down. Or at least that's what I was interested in. I started reading the news. Obviously, nothing is guaranteed again. But you start reading news, you start reading about ETFs, that there's like almost no way that goes down. There's no way that goes down 100%. That's just interesting, just starting, and maybe you lose some money. Again, I'm not a financial advisor, but that's how I started. And if that's only like maybe you lose $2.
Yeah,
I would say start looking into it, and so many people keep it into savings account, and that I love the story that I told about my dad, that he just got started with it, and he actually got a little bit excited about it because he was like, his dad actually lost a lot of money right before his pension.
Okay.
Right before going in, he had a lot of his money, basically his entire pension was in the stock market, and that crashed over 50%, I think it was. In 2008?
2008, probably then, yeah.
And that made him a little bit scared of the stock market, and I think a lot of people did.
Yeah. And keep in mind, back in 2008, You had the subprime mortgages, which mean that people borrowed more money than their house was worth. People were getting credit cards, maxing them out and putting it in the stock market because the stock market seemed to be going up forever because of the whole .com bubble, as we call it right now. So again, people were investing money they couldn't miss. Your grandfather probably put money there that he couldn't really miss because it was his retirement fund, it was his pension. And again, that's sort of why it's so important to do it with money you can actually.
Yeah, so that is that's it for like investing. It sounds like this scary thing, but just start. And like we said, there's just probably so many options that you can choose from, and there's one that will fit your needs.
Exactly.
And we have an entire channel about investing in crypto and stocks as well, so you can check that out. That's in the description and in the show notes. And it is we're starting a series on crypto. We're going from like $1,000 to $10,000. We're trying that. That's like more short term, but also stocks like really long term, like looking at how you should start investing. So what research, what should the mindset be, and stuff like that. So you can definitely check that out, and we would love to see you there.
Yeah, and as a last thing, what I would say, if you want us to make, let's say, a part 2 of this podcast, maybe with more complex products. So bonds were already a bit complex, but we can also talk about leverage trading, future trading, options trading.
Yeah.
There's so many other things. Let us know in the comments as well, or shoot us a message on Instagram, whatever.
Exactly.
Because we can go really in depth here, but get super technical, and you wanted to try and keep this digestible for everyone. Let's put it that way.
Definitely. And I think that the way we showed that you could go from the first way of investing your own savings account to something more complicated like bonds or even crypto just shows all the possibilities there, and you can definitely just start.
Also, we have a Patreon, and actually as bonus content, we will reveal our investment portfolios, including how much we have invested in everything. So make sure to check that out. It's also in the show notes in the description. For $5 a month, you get 10, 15, 20 minutes every single episode of bonus content.
So that is with real numbers. You can check that out, and we would love to see you there. So thank you so much for watching or listening, and we'll see you or listen. You will hear us in the next episode. Baba booey.